If you are holding Nvidia, Broadcom, or any semiconductor stock right now, you need to stop what you are doing and listen very closely. Look at your portfolio. You have seen the red candles over the last 48 hours. The mainstream media, CNBC, Bloomberg, the Wall Street Journal, they are all telling you the same story. They are telling you this is just market jitters. They say it's about inflation or maybe some vague fears about earnings next quarter. They are lying to you. Or at the very least, they are missing the forest for the trees. The real reason tech is bleeding right now isn't inflation. It isn't interest rates. It is a quiet structural shift that happened in a server room in California less than 2 days ago. While everyone was watching the stock price, Google and Meta have been quietly assembling a weapon designed to do the one thing Wall Street said was impossible: break the Nvidia monopoly. For 10 years, Nvidia has been the invincible king of AI. But history tells us that every empire falls from within. And yesterday, we got the first real sign that the walls are being breached. If you own the S&P 500, or if you own individual tech stocks, this concerns you. Because if Google's new strategy works in 2026, the entire valuation model for the stock market is about to change. I'm going to show you the data, the leaked technicals, and exactly what I am doing with my money to prepare for the AI rotation. Welcome back to Stockomo. Let's look at the charts. To understand why this week's news is so catastrophic for the bulls, we first have to understand why Nvidia stock went to the moon in the first place. Most retail investors think Nvidia is a hardware company. You think you were buying the H100, the Blackwell, or the Rubin chips, but that is a mistake. If Nvidia was just a hardware company, they would trade at 10 times earnings like Intel or Micron, but they trade at a massive premium. Why? Because of CUDA. CUDA is the software language that developers use to talk to the chips. Think of it like the operating system for AI. For over 15 years, Nvidia gave this software away for free to universities and researchers. They got everyone addicted to it. Here is the trap. If you spent 10 years building your AI library in CUDA, you can only run that code on Nvidia hardware. You physically cannot take your code and run it on an AMD chip or a Google chip. It simply won't work. This is the Hotel California of the stock market. You can check out anytime you like, but you can never leave. This vendor lock-in is the only reason Nvidia can charge $30,000 or $40,000 for a single chip. It's not that the silicon is 10 times better than the competition. It's that the customers, Microsoft, Amazon, Tesla, have been held hostage by the software. They have had no choice but to pay the Nvidia tax. This lock-in created the greatest gross margins in the history of hardware, but it also created a massive target on Jensen Huang's back. And now, the prisoners are trying to break out. Enter the news from the last 48 hours. This is the catalyst that the market is finally waking up to. Google, along with Meta and a coalition of other tech giants, has accelerated the development of a new software layer. You might have heard names like PyTorch 2.0, JAX, or OpenXLA. I know, it sounds like technical jargon, but this is where the billions of dollars are hiding. Google isn't trying to build a better chip than Nvidia. They realized that is a losing battle. Instead, they are trying to make the chip irrelevant. This new software acts as a universal translator. Imagine you're a developer. In the past, you had to write in CUDA for Nvidia. Now, with PyTorch 2.0 and these new compilers from Google, you write your code in a neutral language. Then you press a button and the software automatically translates it to run on any hardware. It can run on an Nvidia GPU, it can run on an AMD MI300, or it can run on Google's own custom TPU chips. Do you see the magnitude of this? If this software works, and the benchmarks leaked yesterday suggest it is working faster than anyone predicted, Nvidia's moat evaporates. Suddenly, a company like Meta doesn't have to buy 100,000 Nvidia H100 chips. They can buy cheaper chips from AMD or use their own internal silicon, and the software will handle the rest. This turns the AI chip from a luxury good into a commodity. And you need to ask yourself, what happens to a stock priced for perfection when its product becomes a commodity? Commodities compete on price, and price wars kill profit margins. Let's follow the money, because at the end of the day, stock prices follow earnings. Right now, Nvidia's biggest customers are the hyperscalers, Microsoft, Google, Amazon, and Meta. They account for nearly 50% of Nvidia's revenue. But these companies are not loyal to Nvidia. They are businesses, and right now they are bleeding cash on capital expenditures, or CapEx. Think about it from Sundar Pichai or Mark Zuckerberg's perspective. They are spending tens of billions of dollars each quarter just to buy these green chips. Stockholders are getting angry. They want to see a return on investment. These CEOs have a massive financial incentive to kill the Nvidia monopoly. Every dollar they save on chips is a dollar of pure profit for their bottom line. So when you see news about Google optimizing PyTorch or Amazon building Trainium chips, this isn't a hobby. This is an existential war for margins. The market is selling Nvidia stock this week because smart money realizes that 2026 will look very different from 2024. In 2024, Nvidia was the only game in town. In 2026, with this new software, the customers will have leverage. When customers have leverage, prices come down. And when prices come down, the stock price usually follows. So, does this mean Nvidia is going to zero? Does this mean you should panic sell everything and buy gold? No, that is amateur thinking. Nvidia is still the Ferrari of this industry. They have the best hardware, the best engineers, and the most momentum. This company isn't going anywhere. However, the easy money phase is over. We are moving from a phase of blind buying to a phase of selective trading. Here is my playbook for the next few weeks. First, watch the technical levels. I am watching the $105 level on Nvidia like a hawk. This is a critical psychological support zone. If we break below $105 with high volume, it signals that the institutions are de-risking for the long term. If that happens, we could see a flush down to the 90s. Second, the rotation trade. I am starting to rotate capital. I am taking some profits off the table from hardware stocks that have run up 300%, and I am looking at the users of the tech. If chip prices crash, who wins? The software companies. If Google and Meta can lower their computing costs by using their own chips and open-source software, their margins will explode to the upside. I am looking at beaten-down software stocks and cloud providers who will benefit from a hardware price war. Third, don't catch a falling knife. Volatility is high right now. The VIX is spiking. Do not try to be a hero and buy the dip on day one. Let the market settle. Let's see if this Google news has legs or if Jensen Huang has a countermove up his sleeve. Listen, the stock market is a mechanism for discounting the future. For the last 2 years, the market discounted a future where Nvidia owns everything. Today, the market is starting to discount a future where AI is open, competitive, and messy. You need to stay flexible. Do not fall in love with a stock just because it made you money last year. Loyalty in the stock market is how you lose your gains. I'm going to be tracking this Google versus Nvidia war closely. I'll be watching the developer forums, the GitHub repositories, and the institutional money flow. If you want to know exactly when the data flips back to bullish, make sure you are subscribed to the channel. Hit the bell icon so you don't miss the alert. We are navigating choppy waters, but that is where the opportunity is. Stay disciplined, stay liquid, and I'll see you in the next video.